I'm joined today by Ed Walter, President and CEO of Host Hotels and Resorts, the largest lodging REIT in the U.S. Do you foresee needing to access additional capital, possibly for acquisitions?
I would expect that over the course of the next 12 to 24 months, we would be, one, expecting to complete acquisitions, and two, logically accessing the capital markets in order to fund that. Now, some of the continuous equity offering program that we put in place in the summer is in part designed to accomplish that goal. So while cash is obviously fungible, we're generally looking at the capital that we're raising pursuant to that program as capital for investment, either in new acquisitions or for expansions or augmentations of some of our existing assets. You know, as you look at what's going on in our market, in the hotel market, we, of all the real estate sectors, have seen the biggest declines in NOI because we've seen the biggest declines in top-line revenue. The downside of being in a business that prices every day is that when the demand is weak as it's been, you see a significant fall off in revenue, and unfortunately a lot of that trickles down to the bottom line. While that's not good news, the flip side of that is that because of the leverage levels that were used throughout the real estate world over the course of the last 5 years, and because there's a fair amount of debt that matures over the next 2 or 3 years, unless something radically changes in the economy or in the debt markets, I think it's pretty fair to assume that there will be a number of hotels which will either be going back to banks or other lenders, or those sellers will be in a position where they will probably be making the decision to sell as opposed to investing additional capital in those assets in order to pay down debt that may be maturing.
And do you expect those to be entire portfolios coming on the market or more individual hotels?
I suspect that what we will generally see is individual assets or maybe 2 or 3 assets. I mean, it's conceivable that you could see some portfolios, and there are some fairly high-profile deals that are out there right now that are at some level of default or nearing default. So I wouldn't rule out portfolios entirely. Our focus generally has been on building our portfolio 1 or 2 assets at a time, and so as we look at that landscape, our primary focus is on that type of a transaction as opposed to broader M&A.
Obviously, a lot of investors thought, here are these REITs raising all this money, get out there and put it to work. Well, what do you think is the holdup in there? Is it where's the gap between what the sellers are looking to get and what the buyers are willing to pay?
I think part of what you're finding right now is that lenders have generally been willing to work with owners as long as the owner is prepared to stay current. At some point in this process, and each month we get closer to that, though, you're going to be facing a day of reckoning when the loan is due. The owner does not have the capital to be able to repay it because the debt markets won't refinance that loan at the same level that it was originally made at. And so then you're going to start to see some activity occur. You're also starting to see, as the downturn continues and as our cash flows continue to decline, that more properties are getting to the point where the owner has to make a decision as to whether or not they're prepared to cover the negative debt service on that property for a period of time in order to and then hope that they're going to ultimately get paid back when they sell the property for more than the amount of debt in the future. As more and more owners get to a point where they're not prepared to invest in the asset in that form, that's when you're going to start to see more properties go back to lenders. So we're at the point where we would feel very comfortable in investing in assets, and we have been looking carefully at the few assets that have come on the market. It does take some time. The complexity of a lot of the financings that are out there right now, I think, makes it even a more elongated process. But it's probably not going to be the flood that some people might have sensationalized it to be 6 months ago. But is there going to be a steady stream? I would really be surprised if there wasn't.
Great. Ed, thank you very much.
Thank you.
For REIT.com, I'm Matt Bishar.